Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. According to the Federal Reserve, 63 million or 22% of American adults are either unbanked or underbanked. The general view of the mainstream financial services industry is that this population is too risky and costly to serve. We have Kate Howe, founder and CEO of Happy Mango, a New York-based consumer credit risk technology company that works with community banks and credit unions. She says financial institutions have both a moral obligation to address the issue and a business opportunity. Let's discuss with Kate. Kate, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. It's great to be here.
Who are the unbanked and how big of a problem is this?
So the unbanked, as you show the numbers, you talked about the numbers, is almost 1 out of 5 of us is unbanked or underserved. And based on the research from the Federal Reserve, we can see there's a strong correlation with the income level, with education level, and also with race and ethnicity. So if we unpack that 20% a little bit, if we look at the people by income level, people with an annual income of less than 50%, when we look at the underbanked, it was 13% at a national level, but that number jumps to 20% for people who with annual income less than 50%. If we look at education level, people with less than a high school degree, almost half of them are underbanked or unbanked. And then if we look at race and ethnicity, so focus on, look at the Black community, that number almost doubles in terms of unbanked or underbanked. And besides these census numbers, a lot of unbanked and underserved communities also include women who are divorced women who never had the chance to establish their credit, or new immigrants. So in short, it tend to be the more vulnerable members of our society.
What are the business opportunities for community banks and credit unions to reach out to serve this community?
I think there are great business opportunities. There are great business opportunities for the banking service industry as a whole, because if you look at the banked community, and most of the banked are overbanked. Think about the times when we go to a department store and we're offered to open another credit card, right? So that market is almost oversaturated. So the untapped growth opportunities reside in the underserved community. And for community banks and credit unions, they have a unique advantage in tapping into this community by leveraging their existing relationships within their community. We have seen great examples of success in building up consumer lending business from almost nothing to a successful portfolio in a matter of a couple of years by leveraging, for community banks, by leveraging their relationships with their local businesses, their local not-for-profit organizations in reaching out to their community. And once we have a successful consumer business, we all know for financial institutions, it not only means more stable deposits, but it also means a much easier way and better way to build your brand awareness.
Tell us how technology can break down the barriers to reaching those who are unbanked, and especially those individuals living in a banking desert.
Yeah, I'm glad you mentioned the word banking desert. So I was looking at the research published by NCRC the other day. It sounds like 4,000 branches have been closed since the beginning of the pandemic. So it's a staggering number. And a lot of those are from the larger financial institutions. And that just means that more and more of the population will be living in a banking desert and won't be able to access a branch-based financial services. So in this context, technology will be very important to bridge the gap. So to bridge between the individual who need service and the financial institutions. And to reaching the unbanked, underserved community, there are a lot of good technology out there. So for example, at Happy Mango, we have developed a unique cash flow-based financial assessment tool to help our lenders to identify good credit among those individuals who have bad credit or no credit score at all. So through these kind of tools, our clients have been able to help tens of thousands of individuals to access credit, and in turn, those individuals become good and reliable long-term customers.
Kate, one more question for you. You had mentioned community banks and credit unions specifically. Why those two types of institutions, say one of the larger banks like a Citibank or Chase?
Yeah, so for those community-based organizations, they already have extensive and deeper roots within their community, right? They are already serving their neighborhoods, they're already serving their neighborhood businesses. So it's much easier for them to extend their reach into the community, into those individuals who need financial services. The larger financial institutions rely more on bots, apps, and other type of technology. So I think if you look at the general reception of the individuals through their level of trust and the brand awareness, the community banks and the credit unions will have an edge in reaching these communities compared to the larger financial institutions.
That's a great point. Kate, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.